Hi, this is Jeb Hamburger from goldstocktrades.com. Wanted to give my readers an update this morning, Tuesday, November 27th, 2012, before the market opens on some important technical developments that I'm uh, beginning to see. Right now, we're seeing a great divergence between the S&P 500 index and the volatility index. And whenever we've had these bifurcations before, we have seen very powerful corrections in 2010 and 2011. We have not yet seen that in 2012, but in 2013, we could definitely we could possibly see a correction in the general equities markets. We're facing rising taxes. We're facing a economic slowdown. So whenever you've seen this complacency in the market and this overbought uh, in the general equities, volatility can increase sharply, and we could see a correction going into 2013. Now, we may see some resolution from this fiscal cliff and some short-term agreements out of Europe, but the rally, we believe, in general equities will be short-lived, and we're continuing to see this rotation out of U.S. dollars, and we believe that it will continue out of general equities into the precious metals market and the undervalued junior miners. Let's take a look at the US dollar. The dollar has sliced through the 200-day moving average, very bearish indication, and we've had a bearish MACD crossover. So we may be testing that 79 low and if maybe break through that. Remember, back in the summer, we began seeing this negative divergence between the price on the dollar and the declining momentum on both the RSI and the MACD, and we were concerned about a decline in the dollar and a rise in precious metals and breakout in gold and silver, and we did see that. And the dollar hit a very oversold level in September. We've had a counter trend rally uh, or dead cat bounce to this 81.5 area, and now we're beginning to decline again. So we need to watch out for the dollar decline. Um, Technically, it's showing that there's a chance of that, and this may be coming out from this fiscal cliff concerns, or it could be coming out from investors seeking out alternative uh, alternative currencies, alternative hedges to the U.S. dollar. And one area which is getting a lot of focus is silver. Notice silver came $31 mark. We saw very strong support, the 50% retracement in the 200-day moving average. We're seeing actually a bullish MACD crossover on silver. We're not near overbought territory yet. $35 area on silver, a breakout there could be an explosive breakout because the $35 area has been a place of resistance for a long time right now. Once we break through that area, we could see a quick move, a possible quick move to the $42 area. So again, we're seeing the dollar and the general equities market reaching dangerous levels, and we're seeing negative reversals. Yet the precious metals market, especially silver, is moving higher and on the verge of a potential major breakout. Taking a look at platinum, which is which is trading now cheaper than gold. Usually, in the past, it has traded almost double the price of gold. Because of its industrial component in the automobile industry, it's now trading at a discount. But Johnson Matthey came out with a report recently that there may be a short-term supply deficit, especially as most of platinum supply comes out of South Africa, Russia, and Zimbabwe, over 90%. Again, we're seeing here some technical support at the 200-day moving average at the 1550 area. And now we've reversed above the 50-day moving average, also a bullish MACD reversal. So we're seeing some of these undervalued metals, monetary metals such as platinum and silver, making bullish breakouts while the dollar is turning lower and the general equities are reaching an overbought level. So stay tuned and have a great day.